Turning now to Palantir as the company's second quarter results are just hitting the wire. Let's get right to it. Palantir reporting EPS 16 cents versus street expectations of 14 cents. Revenue up 48%, $1.004 billion. Street was looking for $939.25 million. So you have beats there on the top and the bottom. U.S. government, $426 million. That's a beat. U.S. commercial, $306 million. That is a beat. Turning to the outlook, Q3 outlook, they are looking for adjusted operating income, calling for between $493 and $497 million. That's better than expected. Revenue, they're calling for between $1.083 and $1.087 billion. That is also better than expected. For the year, raising guidance here for adjusted operating income, now looking for between $1.912 and $1.920 billion, better than expected. Revenue, they are now calling for between $4.142 and $4.150 billion, also better than expected. I did have the chance to speak with Palantir CEO Alex Karp about the quarter, about some larger trends and issues. Let me bring you those comments. On the results themselves, I asked Karp for his review of how the business is doing. Karp telling me this quarter is a once-in-a-multi-generational quarter. There is no one in software even remotely close to those numbers at our scale. And then you could ask, well, how are they getting these numbers? Karp saying, we're getting these numbers in a way no one else has done, our way, which is the combination of forward-deployed engineers, ontology, and large language models at the most important commercial and government clients across the globe, especially in the U.S. I also asked Karp about that broader AI race between U.S. and China, and I asked him who leads in that race. And Karp telling me, I think America is in the lead in government, and we're in the lead in commercial, but we could lose the lead. We have to have an all-of-country, all-in effort to keep America first, or we will lose. It's not a given that we win just because we're ahead. In fact, being so far ahead is often a danger zone. And finally, I just asked Karp really about the remarkable performance in this stock. Keep in mind, heading into this print, this stock was up about 100% this year. It was up around 560% over the past 12 months. I just asked Karp how he thinks about that. Does he think about that? Karp telling me, it's very hard to figure out how would you value a company with our financials. There hasn't been a company like this ever. You know what I'm thinking about, Karp said? How can we 10x our revenue in the next 5 years and make us even stronger and better? Palantir's results are out. What do you make of this report?
It's a blowout across the board. I mean, look, that's why they're the Messi of AI, right? I mean, it just speaks to this is transformational, the type of growth they're seeing. And you combine that with what we saw last week from the hyperscalers, that just shows this AI revolution. It's just starting in terms of the next stage of growth. Huge, huge step forward for Palantir.
Karp telling me, Dan, Alex Karp, CEO, told me there is no one in software even remotely close to the numbers at our scale, he was saying. Listen, you cover a lot of tech names, you cover a lot of software names. Do you agree with that?
There's nowhere close. I mean, if you look what they're doing, I mean, look, I've covered tech 25 years. This is unprecedented territory. It speaks to our view. It's $1 trillion market cap in the next 2 to 3 years. I mean, they are, look, godfather of AI, Jensen, NVIDIA. Microsoft, you look at Alpha, you look at, obviously everyone that we see in terms of big tech. Palantir is right there.
Let me ask you, Dan, heading into this print, this stock was up 560% over the past 12 months, okay? Just a rocket ship. And there are some analysts on the street, Dan, smart guys like yourself, who've been doing this a long time like yourself, who will say, listen, I like the company, I like the tech, the fundamentals look solid, but they don't recommend the stock to clients, Dan. You've seen this because it's the valuation. They'll call it, in their words, an irrational valuation. What is your response to that?
They hate it at 15, despise it at 50, screaming from the mountaintops at 100, and I think at 200 they'll be doing the same. Look, Josh, we've talked about it. If you focus just on valuation over the next year, you've missed every transformational tech stock the last 20 years. And Palantir, I put in the same category.
Let me ask you, Dan, if it's not valuation then, and you're bulled up on Palantir, you've been right for a long time on this name, but the clients must ask you, Dan, okay, it's not valuation, what are the downside risks that I need to consider? Would it be competition, Dan? Is it product fit? What would the risk be?
Look, you could say valuation, macro, those are obviously, other issues that we could see come through. But the reality is that it's still early days in terms of where they're going. I mean, my view, they're basically creating a whole nother business in terms of the commercial business. Then you look on government, they're gaining more and more share on government. It's kind of a 1-2 punch. I think Karp's just playing a different game, right? I mean, I think he understands on par with Jensen and Nadella in terms of where this is all heading.
I see some analysts on the street, Dan, they do their checks with retail investors on this name, and they say they hear more interest about two issues with Palantir. They're hearing chatter, more interest in potential stock split and capital return. And I'm just curious what you make of those dynamics.
Capital return, I don't think is much of an issue because you're at the end of the day, you're focused more on this is growth mode. In terms of stock split, look, I think that could clearly happen, right? I mean, just given what we see, especially today and where this is going forward. And they are in a massive position of strength. And it goes back to like the last few years institutionally, this has been one of the most hated names I've covered in 25 years, but they just continue to execute. And I put in a rare category, almost a Mount Rushmore in terms of where I see them going.
In terms of the rare category, Dan, though, as you try to look across the competitive landscape, who would you consider competition? Who would you consider rivals or even potential rivals down the line?
Look, Snowflake's competition, you could argue Oracle, Microsoft competition, but to some extent they're partnering with them. Look, there will be competitors. This is not, I mean, they're not the only game in town, but they're just miles ahead from a technology perspective and what I hear from customers.
What do you hear from customers when you ask them? What do they tell you?
So unlike anything they've ever seen in terms of use cases and what Palantir can do relative to a lot of these other companies. And remember, they hardly basically have a direct sales force. I mean, that actually just makes this that much more pretty unbelievable in terms of these numbers.
How much credit, Dan, at the end of the day, do you give the C-suite here? Do you give to Karp?
It's gold standard. I mean, what Karp's done is it's a Hall of Fame performance. I think if you look what he's done, how he's built this company.
Do you see any evidence of these numbers? I mean, listen, I just see a lot of beats across the board. Do you see any evidence of these numbers, Dan, of any kind of macro or even downstream tariff-related impact?
I mean, look, these are numbers. Of course, you always, could they have beaten by more? Could they have raised? I mean, John, these are day plus quarter. I mean, in terms of what the street was expecting, beyond bull case. So there's nothing here that makes you any less, but you're more bullish relative to the numbers.
Turning now to Palantir, as the company's second quarter results are just hitting the wire. Let's get right to it. Palantir reporting EPS 16 cents versus street expectations of 14 cents. Revenue up 48%, $1.004 billion. Street was looking for $939.25 million. So you have beats there on the top and the bottom. U.S. government, $426 million. That's a beat. U.S. commercial, $306 million. That is a beat. Turning to the outlook, Q3 outlook, they are looking for adjusted operating income, calling for between $493 and $497 million. That's better than expected. Revenue, they're calling for between $1.083 and $1.087 billion. That is also better than expected. For the year, raising guidance here for adjusted operating income, now looking for between $1.912 and $1.920 billion, better than expected. Revenue, they are now calling for between $4.142 and $4.150 billion, also better than expected. I did have the chance to speak with Palantir CEO Alex Karp about the quarter, about some larger trends and issues. Let me bring you those comments. On the results themselves, I asked Karp for his review of how the business is doing. Karp telling me this quarter is a once in a multi-generational quarter. There is no one in software even remotely close to those numbers at our scale. And then you could ask, well, how are they getting these numbers? Karp saying, we're getting these numbers in a way no one else has done, our way, which is the combination of forward deployed engineers, ontology, and large language models at the most important commercial and government clients across the globe, especially in the US. I also asked Karp about that broader AI race between US and China, and I asked him who leads in that race. And Karp telling me, I think America is in the lead in government, and we're in the lead in commercial, but we could lose the lead. We have to have an all-of-country, all-in effort to keep America first, or we will lose. It's not a given that we win just because we're ahead. In fact, being so far ahead is often a danger zone. And finally, I just asked Karp, really about the remarkable performance in this stock. Keep in mind, heading into this print, this stock was up about 100% this year. It was up around 560% over the past 12 months. I just asked Karp how he thinks about that. Does he think about that? Karp telling me, it's very hard to figure out how would you value a company with our financials. There hasn't been a company like this ever. You know what I'm thinking about, Karp said? How can we 10x our revenue in the next 5 years and make us even stronger and better?
A blowout quarter for Palantir, the company topping $1 billion in revenue for the first time. The software provider also hiking its full-year guidance as AI demand continues to soar. Joining me now, Louis DePalma, William Blair research analyst for industrials. Louis, Alex Karp coming out saying the haters should be silenced by these results, not mincing words as usual. You know, government revenue rising some 53%, the company also gaining on the commercial side. Is there anything not to like in these results?
Julie, thanks for having me back on the show. In terms of what's not to like, you could point to the fact that Palantir's international commercial division actually experienced a revenue decline of 2%. So while the commercial division with the U.S. Experienced staggering growth of 93%, Palantir's artificial intelligence platform isn't experiencing the same traction internationally. But that is nitpicking, as the American results were extraordinary.
And so can Palantir continue, this kind of momentum, or, continue the similar kind of momentum for, the rest of this year, going into next year? What kind of runway does it have?
Yeah, great questions, Julie. So, one of the big topics that we've been talking to investors, this morning is Golden Dome and FAA air traffic control modernization. So these are two very large potential contracts that Palantir could win over the next 2 months. September is the close of the government's fiscal year end, and usually there is a budget flush and there's a flurry of contract announcements. So we would expect some very large Palantir contract wins related to these programs that should be growth catalysts in 2026. And in addition, we have a proprietary tracker that we call our dotted line tracker, and it suggests that Palantir's bookings for this June quarter were the strongest that they've ever been. So beyond their commercial strength, Palantir is very well positioned for that growth that you just mentioned.
So, Louis, you definitely don't sound like you're in the hater category that Alex Karp talks about, and yet you do have a market perform rating on this stock. Obviously, we know it has been a rocket ship and then some, up over 500% over the past year. So even if the outlook is as bright as you're painting it, is that already priced into the shares?
It's interesting in that last quarter, Palantir also had a very strong beat and raise, and the stock traded down by 15%. One of the flags we would point to over the long term is the fact that it seems that the big language learning model providers, so OpenAI, Anthropic, Elon Musk's xAI, and Google Gemini, they are knocking on Palantir's door, if you will, and that they see this huge honeypot opportunity with the U.S. government to win these very high margin contracts. And they are aggressively going after these contracts. And OpenAI is aggressively trying to hire away Palantir's talent. And so it sets up for an interesting battle over the next 10 years. It will be fascinating to see how this plays out. But the reason we're market perform is, there's a lot of funding going to OpenAI, and they have a lot of political connections similar to Palantir and similar for Anthropic. Those are very capable companies. So if OpenAI and Anthropic and Databricks, if they didn't exist, maybe we would be outperform, and maybe Palantir could continue to grow 48% year over year. But things are going to change over the next 10 years. That can be assured. And so we would expect revenue growth to decelerate and the valuation multiple to become more normalized.
One of the other comparisons that I think is really interesting is to look at Palantir versus some of the big legacy defense contractors. And so we're showing here the market cap of Palantir, which as of the open today, before today's move, was around $380 billion. But as we talked about, revenue this quarter was only about $1 billion. So its revenue is dwarfed by that of the likes of RTX and GE and Boeing. But of course, its market cap, its valuation is now much larger. And we saw a similar situation between something like a Walmart and an Amazon, right? Where Walmart's revenue was larger than Amazon's for a long, long time before it caught up. Are we going to see,
Yes,
though, this rapid growth? I mean, how should investors think about Palantir versus the legacy companies?
Yeah, and I would point out that it won't just be Palantir versus Northrop Grumman, Raytheon, GE Aerospace, Lockheed Martin, and Boeing. It will also be Palantir and OpenAI and Databricks and Anthropic. And so Palantir will be sharing this pie, and Palantir has a ton of momentum. They are doing exceptionally, and we think they will continue to do well for the next several years, as it will take time for the others to ramp. Part of Palantir's success and the reason that it's valued so much higher than Lockheed Martin and Northrop Grumman is Palantir has a 46% operating profit margin, which is literally 4 times larger than those legacy defense companies. So Palantir is able to price its software and its products at a much more profitable level than Lockheed Martin can sell an F-35 fighter jet, or General Dynamics can sell a Columbia-class submarine. But you would think over time, with increased competition, that that profit margin will be whittled away to some extent.
To some extent, but maybe not as low as some of the defense contractors by comparison.
Right.
We shall see. Louis, it's great to see you. Thanks for joining us.
Yes, thanks for having me on, Julie. Take care.
You too.
Second quarter results for AMD, they are just hitting the wire right now, so let's get you those numbers. AMD, Q2, adjusted EPS, 48 cents. Street was at 49 cents. Top line, though, Q2 revenue comes in at $7.69 billion. The Street is at $7.43 billion. Let's turn ahead. Let's look for what they're calling for Q3. AMD sees Q3 revenue between 8.4 to $9 billion. The Street was at $8.37 billion. And I'm just looking at shares right now to see the immediate reaction. Up a bit in the after hours here. No, now we're actually popping more than 2%. And keep in mind, this stock had a nice run into this print. It was up about 45% year to date. Analysts would chalk that up to different reasons. They'll talk about China AI returning. They were talking about how the core business did seem to be doing just fine, they said. And at least initially here, we see a positive reaction of about 1.2% in the after hours. The managing director and senior semiconductor research analyst, that'd be Cody Akery. Cody, it is good to see you. So AMD reports. What do you make of the results, Cody?
Yeah, they look like strong numbers to me, up about 300 million this quarter and about a similar amount for September. The bottom line is a little iffy, given that they're just in line with the consensus, 48 cents for June. And then the bottom line for next quarter, they don't give an EPS guidance, but they are saying that it excludes any China shipments, which we expect them to get back into China quickly as the Trump administration has relaxed those guidelines. And so that number, 800 million, came out of the June number. And so if you add that back in, then you've got a really nice upside this quarter. And if you add anything back into September, then that 400 million turns into probably something closer to $1 billion of upside. And so I think overall it's a very strong number, and hence the stock reaction after hours.
Cody, let me ask you a key issue that obviously, your colleagues on the street are asking. Broadly, Cody, How big is the AI opportunity for AMD, for Lisa Su's company, with China sanctions reversed?
Well, with China sanctions, it's about $1.5 billion that they expect that they lost this last 2 quarters. And so I think that reverses pretty quickly. Overall, for AI, it's a huge opportunity because you see what NVIDIA is doing. And really, AMD is the only viable alternative outside of the custom ASICs that the hyperscalers are doing. So if you want general purpose CPUs, and every server has to run on a general purpose CPU, to handle all the back office and all the coordination of these hyperscaler data centers. Then if you're looking for an alternative to Intel or NVIDIA, AMD is really the only game in town. And they've been really eating Intel's lunch from a performance standpoint, and from a price and performance standpoint versus NVIDIA, they're also a very, very good alternative. So I think the upside is really unlimited for AMD. It's just a matter of can they capture it? And I think so far they are starting to.
Cody, you mentioned NVIDIA. When you think about AMD's latest and greatest AI chips, how would you stack them up versus NVIDIA? Is there a performance gap there?
Well, with their MI350, they've really closed the gap. With their 400, they're getting some performance advantage. Really, where AMD gets the biggest advantages in their memory bandwidth, their ability to throughput faster data. And so on a processing to processing basis, AMD likely still trails NVIDIA somewhat, but they what they make up for or lack in processing, they make up for in memory bandwidth. And that's really been their strength, and that's really the gating factor for these hyperscale data centers is how fast can they push product through these processors. It's not necessarily absolute processing speed, but it's the bandwidth of memory that is the limiting factor.
Chris, I want to get you in here because Cody likes this name. I know he tells his clients this one's a buy. You're not such a fan, Chris, of this one. Explain why.
Well, it isn't that we're not a fan, right? When you look at the Pro portfolio, we have shares in NVIDIA and we have shares of Marvell. And, I think Cody said, if I remember correctly, that AMD is a viable alternative after some of the custom ASIC chips that the hyperscalers are doing. You're talking about, Amazon, Meta, Microsoft, Alphabet. That is one of the angles that Marvell offers us opportunity into those custom ASICs, as well as riding the overall wave of AI and data center demand. Marvell also has the enterprise networking and the carrier infrastructure, which I see really benefiting from incremental capital spending as AI adoption continues to rise.
Cody, your response to Chris's comments there.
Oh, I completely agree with Chris on that. The ASIC vendors, the Marvells and Broadcoms of the world, are really coming on into their own as the hyperscalers are continuing to lean into custom solutions. They're wanting tailored specific solutions for their very tailored specific workloads. And so they don't need to pay for all the overhead of a general GPU that is NVIDIA if they've got a very specific workload that they need to customize for. And with these ASIC vendors, they're able to do exactly that and provide a much cheaper internal solution that meets only the needs of the hyperscalers individually. And I think that that's a big market going forward. But there's also the need for general purpose GPUs, CPUs. And so I think that AMD can bridge in between because you do need CPUs to run even those hyperscale servers that are running Marvell and Broadcom chips. They have to have CPUs to manage all that backlog or that back office workload. And so I think that AMD is a very, very nice alternative to Intel today, is what we've seen, and to NVIDIA's Grace Hopper or Grace CPU that is entrenched in their Blackwell processor.
Cody, how should investors think about the 232 tariffs and what that could mean for AMD's financials?
Well, the tariffs are less of an issue, I think, only because these processors are being built largely in Arizona, and so these are domestic production into domestic data centers, and so I don't think tariffs are going to be a major issue. There are issues as AMD starts to ship into China and any restrictions into China, but I don't think that tariffs are going to be a major concern.
You know, Cody, AMD offered what looked like a solid forecast here. You see the shares are slipping here, at least, you know, in the after hours. What do you chalk that up to, Cody, potentially? Was this just a very high bar heading into this print?
Yeah, I think so. I think that AMD has had such a run that almost anything was going to cause some profit taking. Only an absolute blowout number was going to probably keep investors happy. And so I think that anything close to the bottom line, inline June number, and what probably will shake out to be close to the bottom line September number is going to be an excuse for traders to take profits. And I don't blame them for that. But I do think in the long run, AMD is a great investment, and it will grind higher following any quick trading volatility.
AMD CEO Lisa Su said they didn't include any revenue for the MI308 chip in the third quarter guidance. That's the one that goes into China because the licenses are still under review. And this coming after NVIDIA said last month that the U.S. would be granting licenses to ship AI chips to China. My panelists, Dan Halley, Kimberly Forrest, still with me. Dan, when you looked through the earnings, you know, and you sort of were figuring out what your takeaways were, does the China stuff sort of overshadow what seemed like a good quarter?
Yeah, I mean, that's really kind of what hurt the operating income, right? Why they saw that operating loss for the quarter. I think one of the other issues just being that the PC side, the gaming side, seemed to do rather well. While the AI side, the data center side, just kind of met expectations. So I think, you know, when it comes to a company like AMD, a lot of investors want it to be the next NVIDIA, and it just doesn't appear to be doing that at this moment. But they do have their MI355, MI350. Those are coming. Those are to compete with NVIDIA's Blackwell chips. And then obviously we have the MI400s coming. Those would also compete with NVIDIA's higher-end chips, the Vera Rubin, in the future. And so I think that's really kind of the biggest issue here is I was reading some of Bernstein's notes this morning, basically saying that, look, the outlook for data center doesn't really impress the street when, you know, they're anticipating the kind of explosive growth that they saw out of NVIDIA. But, you know, NVIDIA is the leader in this space. AMD is trying to catch up. They also, while doing that, have to convince customers that they should buy their chips, not just NVIDIA's.
Right, definitely. So that's sort of the underlying story here. And this brings me back to a comment I read this morning, Kim, from Jordan Klein over at Mizuho, who tracks the tech stocks. And he said, who really owns AMD or NVIDIA just due to upside from sales back into China that had been blocked by Trump. He's saying that's not really the story here. So is that how you feel about AMD too? And sort of how much room do they have in that data center business?
Sure. Well, I think that they have a lot of room. And yeah, it would be nice for them to be able to sell chips today. But if you're owning a stock, and we own them for 3 to 5 years, so we have a longer term view, our view is that AMD is the closest thing to be able to compete against that Blackwell chip. Now, they have a couple of really important hurdles to get over. The first is just basic data center hygiene. Data center managers like to have everything uniform and the same because things are always breaking. They have to be able to understand, you know, the parameters of the chip. What does it look like when it's going to break? How can we whip that board out, slide a new one in, and get on with our job? So that is the first hurdle. The second hurdle is NVIDIA's name brand. In my note that I wrote earlier today, this really, to me, feels like the .com era, where any kind of goofy idea could get funded as a .com if they had two things. If they specified Oracle was their database and Sun Microsystems was the servers that they were going to run on it, because that tech stack looked like you knew what you were doing. And in today's funding world, I am sure nobody's out there saying, hey, we're going to give a whirl with these AMD chips because they're probably as good and cheaper, and you know that's good. I'm sure every new AI idea is specifying the NVIDIA as part of its tech stack. So these are the things that AMD has to overcome. But I think they can because of their product knowledge, and they have financial latitude to, last as long as it takes to kind of chip away at that market.
So, Kim, all of that said, do you want to own AMD over NVIDIA, or you still got to own both of them?
I think you have to own both. NVIDIA is today, and AMD has the potential for tomorrow.